the last few hours, something extraordinary happened in the financial world. Silver, yes, the precious metal often called the poor man's gold, went on a tear and came within a hair's breadth of the once unthinkable $100 per ounce. For the first time ever, this humble metal is flirting with a triple-digit price tag, shattering records and sending shockwaves through commodity markets. Traders, investors, and analysts are all asking the same question. What on earth is driving this historic rally? And what does it mean for everyone watching? Just to put this in perspective, silver started the year around $70 an ounce. That was only a few weeks ago. Fast forward to today, and we're looking at prices that briefly broke above $99 before cooling off slightly, essentially doubling the metal's 2011 record high of around $50. Let that sink in. A price level that held for decades as an almost mythical ceiling has now been left in the dust. This is a big deal. It's not every day, or every decade, that you witness an all-time high being shattered not once but multiple times in rapid succession. And it's happening right now, practically in real time. How did we get here so fast? Consider this. Just yesterday, silver closed around the $96 mark in US trading. That was already sky-high by historical standards. But then, as Asian markets opened overnight, the floodgates opened. In a matter of hours, silver blew past its previous records. First $97, then $98 an ounce, like they were nothing. Traders watching the screens were stunned as it seemed nothing could stop this rally. By the time Europe woke up, silver was teasing that fabled $99 plus dollar level. At this point, the entire financial world snapped to attention. Social media lit up with astonishment. On X, formerly Twitter, the hashtag #SilverSurge was trending as investors and analysts alike tried to make sense of the frenzy. One post captured the mood perfectly. The white metal just hit its highest price ever as the world rushes for hard assets. $100 isn't just a meme anymore, it's the next stop. That sense of euphoria, even a little fear of missing out, has spread like wildfire. Everyone from Wall Street pros to everyday folks curious about investing is now talking about silver. And when an obscure corner of the commodity markets becomes headline news, you know something big is going on. In an ironic twist, just a few years ago in 2021, an online community of traders tried to spark a silver squeeze to drive prices higher, and it barely made a dent. Now the squeeze is happening organically, powered by fundamentals rather than a flash mob, in a far more dramatic fashion than anyone back then imagined. So what's really driving this surge? In a word, fear, but also greed and a healthy dose of fundamentals. Let's start with the fear factor. In uncertain times, silver and gold have always been go-to assets for wealth preservation. They're classic safe havens. And unlike gold at nearly $5,000 an ounce, silver is still relatively affordable for ordinary investors. That accessibility, one reason it's nicknamed the poor man's gold, means the barrier to entry is low. Many people can buy a few ounces of silver as insurance for their portfolio, which only increases demand when fear is in the air. Right now, investors worldwide are anxious about a lot of things. Decades-high inflation eroding their purchasing power, banks wobbling under bad debts, and whispers of a potential liquidity crisis in the broader economy. And don't overlook geopolitics. Conflict and uncertainty on the world stage, from unresolved wars to simmering trade tensions, have only added to the jitters. In times like these, people instinctively flock to assets that feel solid and reliable, and silver fits that bill. Central banks may be hinting at cutting interest rates soon to prop things up, but that's a double-edged sword. Easier money could spur more inflation down the road, and folks are hedging their bets. Silver, being a tangible asset no one can print out of thin air, is seen as an inflation hedge and a form of real money. Even central banks have been bolstering their reserves with precious metals, mostly gold, at a pace not seen in decades, signaling a shift away from reliance on the US dollar and paper assets. That institutional move into hard assets has not gone unnoticed by investors, adding more fuel to the silver and gold rally. But it's not just about fear and safe havens. Greed, or more politely optimism, is playing a role too. Because silver isn't only a hedge against doom and gloom, it's also an industrial powerhouse metal. Think about the world we're headed into. Electric vehicles, solar panels blanketing deserts, 5G networks, high-tech electronics, even cutting-edge military and AI hardware. What do they all need? Silver. Lots of it. The metal is a critical component in everything from photovoltaic cells to the circuitry in your smartphone. In each new EV or solar panel, there's a few grams of silver working behind the scenes. Multiply that by millions of units, and suddenly a massive chunk of annual silver production is spoken for. As global industry goes green and digital, demand for silver in manufacturing is exploding. We're talking a real, sustained need for the stuff, not just speculative buying. In fact, last year industrial demand for silver hit record highs, accounting for roughly 60% of total silver usage worldwide. The push for renewable energy and advanced technology means silver has solid backing from commodity markets fundamentals. This isn't just a bunch of traders hyping it up. Real businesses need silver, and they're scrambling to secure supply. Some analysts even call silver a strategic metal now, almost like oil, because modern economies can't function without it. Then there's the supply side of the equation, and this is crucial. Silver's supply is relatively inelastic in the short term, meaning you can't just whip up a lot more of it overnight when demand spikes. Most silver comes as a byproduct of mining other metals, like lead, zinc, and copper. So even if silver prices surge, miners can't instantly boost output without new mines or significantly higher production of those other metals. We're seeing some cracks in the supply chain. One major factor is coming out of China, one of the world's top silver refiners. Starting this year, the Chinese government has tightened controls by requiring special licenses for companies to export silver. Only a few dozen firms are approved, and if you're not on the list, your silver stays in China. This policy shift has quietly choked off a part of global supply, making it harder for the rest of the world to get their hands on Chinese refined silver. At the same time, over in the United States, it seems there's a bit of a stockpile race. Reports indicate that US inventories of silver, like those in the COMEX warehouses, have jumped dramatically as big players, possibly even the government, have been amassing physical silver. In fact, inventories rose by tens of millions of ounces in the last year or two, which is roughly equivalent to a sizable chunk of annual mine production. It's like a vacuum sucking up available silver, pulling it out of the open market. Why? Maybe as a strategic reserve, since silver is deemed critical for industry and defense, or maybe just smart money hedging against future shortages. Whatever the reason, it's another squeeze on supply. Don't forget the wildcards in mining too. Political and labor issues can hit production. For example, in the world of copper, another vital metal, we recently saw a major mine in Chile halt operations due to a workers' strike. That kind of disruption sent copper prices spiking to record highs. Now, silver hasn't had a headline-grabbing mine strike on that scale in the last few weeks, but the spectre of supply disruptions is always lurking. Many silver mines are in countries where political instability or regulatory changes can strike without warning. All these supply worries add a risk premium to the price. Basically, buyers are willing to pay more today because they're nervous about getting supply tomorrow. When you look at silver's insane rally, a big part of it is this crunch. Surging demand colliding with constrained supply. And then there's something less tangible but just as powerful: momentum and market psychology. Once a rally like this gets going, it takes on a life of its own. More and more investors jump on the bandwagon, either out of genuine belief or simply fear of missing out. It's a feedback loop. The higher the price goes, the more headlines it grabs, and the more people pile in, which then drives the price even higher. Social media hype amplifies it too. We have gurus and influencers now proclaiming silver as the trade of the decade. One notable example, Robert Kiyosaki, the famed author of Rich Dad, Poor Dad, recently went on record saying that silver's price could jump 400% in the next year. That's not a typo. He believes a fourfold increase is possible, which would imply something like $120 or $130 silver. He's been urging everyone who'll listen to not miss what he calls silver's explosion. Now, Kiyosaki is known for his very bold predictions, and true to form, he's heavily invested in hard assets himself, from precious metals to real estate investing, so take it with a grain of salt. But the fact he's shouting about silver to his millions of followers tells you the kind of buzz that's out there. We're even hearing chatter about long-standing conspiracy theories coming to life. Claims that big banks manipulated silver prices for years are gaining traction again. Every time silver jumps, those voices say, "See? The shackles are off. This is the real price of silver shining through." It adds an almost mythic narrative to this rally that entices more people to buy in. Meanwhile, everyday investors are also flocking to physical silver. Dealers across the globe are reporting that they can't keep silver coins and small bars in stock. Websites for bullion sales show many popular items as sold out or back-ordered, and where you can find them, the premiums, basically the extra cost over the raw silver price, are through the roof. This tells us one thing: a lot of people are desperately trying to get their hands on tangible silver, perhaps as a form of wealth preservation they can hold outside the banking system. It's like a gold rush mentality, but for silver. The perception of scarcity, even if there's technically enough silver in the ground, is fueling a buying frenzy. Some local coin shops have even reported lines out the door as everyday people rush to convert cash into silver. Online interest is exploding too. Search engine trends for terms like "buy silver" have skyrocketed in recent days, reflecting how the public mania is catching on. And if you've ever tried buying something in a panic alongside a crowd, you know how quickly prices can spiral. Add all these factors together: safe haven demand, inflation fears, industrial usage, supply squeezes, hype, FOMO, and you have a perfect storm. Silver isn't rising in a vacuum either. This is part of a broader move where hard assets are gaining favor. Gold is near $5,000 an ounce, also at all-time highs. In fact, the classic gold-silver price ratio has collapsed to around 50 to 1, its lowest in years, as silver vastly outpaces gold in this rally. And other commodities are booming. Just look at copper, which recently hit a record north of $13,000 a ton, about $5.90 per pound, after that Chilean mine strike and persistent supply deficits. The entire commodities complex has caught a bid as investors seek shelter from shaky stocks, frothy tech valuations, or whatever other risks they see on the horizon. In a way, it's a rotation out of paper assets and into real, tangible stuff. Silver just happens to be the poster child of the moment for this shift. And because it's a smaller market, much smaller than gold for instance, when a tidal wave of money comes in, the ripples turn into a tsunami. Small doors, big crowd. You can imagine the result. Now, with silver at nearly $100, everyone watching is inevitably asking, what happens next? Well, let's break down the possibilities. The immediate drama is obvious. Will silver finally punch through the $100 barrier? Round numbers have an almost magnetic pull in markets, and often a nasty bite. If silver clears $100 decisively, we could see another blast of buying as algorithms and momentum traders jump in, since there's no historical roadmap above that level. It would be pure price discovery in uncharted territory, and that could mean quick jumps to $110, $120, who knows. On the flip side, $100 is also a huge psychological resistance. A lot of investors who've ridden this wave might use it as an opportunity to cash out, at least partially, thinking, "I'll sell at the big 100." In fact, some automated trading programs are likely programmed to start selling at that triple-digit price point. So we shouldn't be surprised if the first touch of $100, if and when it happens, triggers some wild volatility, maybe a spike above it briefly, and then a sharp pullback as profit-taking kicks in. Markets love to test these big milestones with a kind of tug-of-war. Bulls try to push through, bears try to defend the line. It's very possible we'll see some whipsaw action around $100 before a clearer trend emerges. Beyond that short-term battle, the question is, how sustainable is this rally? We're up nearly 40% in less than a month, an astounding move for any asset, let alone a heavy metal commodity. It's healthy, even, for markets to digest their gains. Some experts are warning exactly about this. One highly respected precious metals strategist recently noted that while she's bullish on silver long-term, The speed of this surge means a pullback is increasingly likely. In her view, a lot of the good news is already priced in. Think about it. We've had weeks of talk about Fed rate cuts coming, about inflation maybe peaking, about supply tightness. None of these themes are secrets. When everyone knows about an idea, it loses some power to keep pushing prices higher. There's a Wall Street saying, buy the rumor, sell the news. We might be at that point with silver in the short run. Inflation is high, yes, but it's not spiraling higher at this moment. It might even be cooling slightly in some areas. The dollar had been weakening, which helped silver, but recently it has steadied a bit. If the US dollar stabilizes or rebounds, that can put the brakes on the metals rally. And interest rate cuts, while anticipated, haven't actually happened yet. There's always a chance the Fed could delay or do less than expected, which would temper some of the enthusiasm in gold and silver. Also, remember those industrial buyers we talked about. If silver stays extremely expensive, they're going to look for substitutes. This isn't just a theory, it's already happening. For instance, a major solar panel manufacturer recently announced it started using alternative materials in its solar cells to reduce the amount of silver needed. High prices force innovation. Companies will find ways to use less silver if it means protecting their profits. Over time, that could crimp demand. And higher prices also tend to draw out more supply eventually. Maybe not instantly, but give it some months or years. Miners will ramp up production, and scrap metal will flow into the market as people melt down old jewelry and family silverware to cash in. So the sky-high prices we see now might actually sow the seeds of their own correction. Crucially, despite the current excitement, we have to note, there isn't a true shortage of silver in the world at the raw metal level, at least not yet. What we have are bottlenecks and timing mismatches. Mints running low on coin blanks, refiners operating at capacity, shipping delays. Those issues make the market feel tight, and they are real issues. But if you're an industrial user with enough money, you can still source those big 1,000-ounce bars of silver, albeit at a premium. The CEO of a major precious metals exchange pointed out that what looks like a shortage is mostly a retail phenomenon. The small bars and coins are scarce because everyone and their grandma is trying to buy them at the same time. Big picture, there is silver available, and if the price stays high, more will come out of the woodwork. Already, coin shops and pawn dealers report increased selling by people eager to cash in on high prices. If silver stays elevated, a wave of recycling, from melted jewelry to old silverware sets, could bolster supply and eventually put a brake on the rally down the line. That reality could cap the upside in the long run. So yes, a pullback can happen. It could be sudden and sharp. That's often how these hot trades end, at least temporarily. Volatility cuts both ways. Quick-footed traders might relish these violent moves, capitalizing on every jolt up or down. But investors with a longer horizon could be in for some sleepless nights. There's a reason silver earned the nickname the devil's metal among some traders. Its price swings can test anyone's nerve. In short, if you're along for this ride, buckle up. If silver fell back to, say, $85 or $80 in a swift correction, it wouldn't even be that crazy in percentage terms given the run it's had. It would scare a lot of latecomers, but it might just bring the price back to a more solid footing before the next move. The key for those bullish long-term is that any correction doesn't erase the fundamental support underpinning silver. And by all accounts, those fundamentals, strong industrial use, investor distrust in fiat, etc., aren't going away. In fact, if we zoom out, this could just be the early chapters of a much larger story. The London Bullion Market Association's survey of analysts for this year showed an expectation that silver's average price in 2026 would be almost double last year's average. That's an astonishing forecast from industry insiders, essentially predicting that even with ups and downs, silver prices might stay around these levels or higher on average. If that holds true, then after any dips, we could see silver marching back up, maybe even breaking new ground above $100 and beyond as the year progresses. For ordinary investors and folks thinking about things like retirement planning, the big takeaway is not to get swept up in the hype or panic. These moves are exciting and scary at the same time. It's the kind of price action where fortunes can be made or lost if you're leveraged to the gills. But if you're looking at silver as part of a long-term strategy for wealth preservation, it's important to stay rational. After all, retirement planning is about ensuring long-term stability, not chasing short-term thrills, and that wisdom holds even now. One possible approach, and what many financial planners often suggest, is to keep precious metals as a modest portion of a diversified portfolio, a hedge rather than a main bet. Silver can indeed be one possible hedge against inflation and uncertainty, complementing assets like stocks, bonds, and real estate, but it shouldn't be the only egg in your basket. If you have been in silver for a while, you're sitting on big gains. It might be time to consider how to protect those, or at least be prepared for volatility. That could mean setting stop-loss levels, taking a little profit, or just mentally steeling yourself for swings. If you're just now intrigued by silver at $100, it's worth exercising caution. Some investors opt to dip in gradually, a method called dollar-cost averaging, rather than throwing a lump sum at the highest price in history. Others explore indirect exposure, like investing in mining companies or diversified commodity funds, which can spread out the risk. These are options to consider rather than all-or-nothing moves. The point is, whether you're saving for a house, building a nest egg for retirement, or just trying to grow your money, you have to gauge your own risk tolerance. Don't let the glitter of silver blind you to the risks that come with the potential rewards. At the end of the day, silver's run toward $100 is more than just a market quirk. It's a reflection of larger themes in play. It screams that people are seeking safety, that they're questioning the status quo of monetary policy and looking for alternatives, and that technology-driven demand can fundamentally shift an old market in new ways. We are witnessing financial history in the making. For those who know their history, the spectre of past silver spikes looms large. In 1980, an attempt by two billionaire brothers to corner the silver market sent prices to $50 an ounce, only to implode spectacularly when the bubble burst. A lesson in how quickly fortunes can reverse. In 2011, silver ran up again to nearly $50 amid a post-recession commodity boom, but that too fizzled out as the economy stabilized. These episodes haunt veteran traders whenever silver goes vertical. Will it crash back down like it did after the 1980 and 2011 spikes? Or is this time truly different, heralding a new era where precious metals play a bigger role in our financial lives? That verdict isn't in yet. What we do know is that today silver has reminded the world why it matters. It's not just a shiny trinket or a boring commodity. It's an asset that can make markets tremble when conditions are right. So keep your eyes peeled on silver in the days and weeks ahead. The $100 level is the big story right now, but it's what comes after that will determine the legacy of this rally. Whether it blasts off beyond $100 or pulls back and builds for another run, this volatility is a wake-up call. It's a reminder that in investing, as in life, change can come at you fast and from unexpected directions. The winners will be those who stay informed and level-headed. And if you're watching this wondering what to do, remember, the goal is to grow and preserve your wealth in a way that lets you sleep at night. Silver's adventure is one thrilling chapter in that never-ending quest. Right now, that chapter is reaching a crescendo. Stay tuned. Whatever happens next, it's going to be remarkable. A spectacle of finance no investor can afford to ignore. In silver's story, as ever, fortune tends to favor those who stay informed and patient. Only time will tell for sure.